Very important right now for you to take 1 second and hit that like button. Help push us through the YouTube algorithm. And then it's also equally as important to pound on that bell notification, hit that bell notification and click all. That way you stay up to date on all my latest videos as the inflationary depression that I've been warning about. Opinions, because I am not a financial advisor. This is just my overall thesis of the market, right? And as we get into it now, you can see the XRP price is now sitting. Vincenzo'S Gold Crypto Investing, and you can see here on this Sunday morning or midday Sunday, approaching the noon time or slightly after, we had that update yesterday about a potential bullish turnaround as the financial markets are getting subtly bullish. If we take a look first, we're going to get a look at the XRP price, because we were warning about saying this could come down a little bit before it comes up. But you can see what happened over the last few days as we've been in this consolidation for quite some time. After we had that nice pump that we told you, the upper resistance major would be starting at this 50 cents, and we got topped out. I hate when it does that. Got topped out right there, came back down, and then now we've had this long consolidation with the volume declining, right? But we came down from Friday when I was driving home, and we pumped back up into the moving averages. But we talked about when you seen right here, the red 50-day cross through from above to below the blue 100-day that's bearish, and now it's actually in the 3-hour time frame crossed the 200-day. So now it's come from being above the 100-day and above the 200-day to crossing below the 200-day and the 100-day, and that gets bearish. That's a sign that the sellers are starting to take over the market, and you need to really pay attention, because as this is underneath it, it can act as resistance now and drive the price all the way down here to this 37 cents. That is your next major underneath support that I still feel like it's going to get to, but the markets are turning subtly bullish. But what could happen, like we talked about yesterday, is today this could actually drive all the way down, right? Come all the way down here and then drive all the way back up on a big reversal, where you get on our industry exclusive measuring tool a 18% fall followed by a 50% moonshot, right? So that's what we're paying attention for, to see what happens on a potential bullish update, as we do have an advisory that we could even try to get, if we get ultimately bullish as the future market opens up today. Say we slip down to 39.40 cents and then moonshot up here, you could try to make a run this week, not today or tomorrow, or it could happen, but sometime in the next 7 days this week, as the bullish sentiment continues to materialize and metastasize through the markets and the equity markets. You could try to make a run up at 60 cents, but you first have to get above the 50 cents, stabilize these moving averages. The volume will eventually come back in, but you can see the volume is still declining from your peak here to your next peak down here. You can see the step down, and then the next peak was here, and then eventually this is going to bottom out and the volume's going to come back in. So we're watching out for a 37 cent still major underneath support, and then we're looking at a 50 cents major overhead resistance with an outside shot this week to come all the way up here to 66 cents. But we have to watch to see how the coins in the market materializes through this, right? And then we were going to look at the stock market, take a look at the Dow Jones, and had a very strong day on Friday, as well did the rest of the equity markets. And if we look at the Dow Jones and see what kind of news is going on, market week ahead, Dow Jones yield, the US dollar, S&P 500 Dow Jones forecast looking bullish. Stocks advance Friday as media reports store optimism for softer Fed stance. And this is what was going on at the end of the week, and had the equity markets rallying and the gold markets rallying, and treasury yields going down. U.S. stock rallied on Friday as a report from the Wall Street Journal raised hopes for the Federal Reserve could adapt a softer policy stance on rate hikes. And it's from the Wall Street Journal, and they've been wrong a lot on what the Fed's going to do. So I wouldn't really pay too much attention into that yet until the Fed starts to say something, because they've been on top of it and transparent. The Dow Jones jumped 2.5% to 31,000 and change. Composite climbed 2.3% to 10,000. S&P Standard & Poor's was up 2.4%, with all sectors in green for the week. The indicators reported highest gains since June. The 2-year yield slumped 12.7 basis points to 4.48, and the 10-year rate slipped less than a basis point to 4.22%. And old Vincenzo'S Gold Crypto Investing has had a forecast since last year, when the 10-year treasury was below 2%, that it would go to 10%, and we're halfway there now almost. Treasury yields dropped following a news report from the Wall Street Journal that certain Federal Reserve officials are becoming uncomfortable with the speed of interest rate hikes. The Fed has raised its target funds rate by 300 basis points since the policy tightening began this year. The probability of the Fed lifting rates in November by 75 basis points is 96.5, according to CME Fed Watch tool. The hope that the Fed may temper or take the foot off the gas pedal slightly is helping the markets. Managing members analysis was cited as saying it in Reuters news report, and that's why I'm thinking there could be an overreaction bullish sentiment this week, and why I have a crypto bullish watch in effect for this week on several coins, because even though I don't think the Fed's going to pivot in December, a week or two where articles are coming out and where people start to think or hear that stuff might be going the other way, it will initiate the computers to buy and the people to buy, and the emotions of the people to buy. The U.S. dollar index declined 1% to 111.85. The greenback weakened 1.8% against the Japanese yen, 147.2, retesting from its highest level in about 3 decades. Meanwhile, state level debt of the Bureau of Labor Statistics showed the unemployment rate fell in 11 states. In the District of Columbia in September, rose in 9 states and held steady elsewhere. The national unemployment rate fell to 3.5% in September from 3.7% in August. And that'll let the Fed keep its foot on the pedal when you see unemployment numbers going down and inflation staying up. That leads them to believe, falsely or correctly, I believe falsely, that we have a strong labor market and a strong work market. So they won't be as hesitant to raise interest rates. But that is why I have this watch on for this week.